But let's turn our attention to our ecosystem, which people probably care a little bit more about. Pulse has dipped over the last couple of days, and it's so far, now that it's rounding up where it is at the moment, kind of maybe proving out what a lot of people have hoped. So, I mean, we've seen it dip down to the SAC rate of 0001. We went a little bit below that earlier today. Actually, I woke up to us being below SAC rate just a bit this morning, I saw. Pulse X is at the moment 40423. It had dipped below 4 a little bit ago. The combined hexes sit at about 2.4 cents or so, 2.5 cents at the moment. So, and it was up over 3 cents here over the last couple of weeks. So, you know, when you have colossal moves like we just had over the last few weeks in this ecosystem with significant whale wallets buying and all these things, lots of attention coming to this ecosystem, this is what you're going to have happen. And I think you are a great person to talk to about this, Ewok, because, you know, you've lived multiple cycles here now and seen, even in a bull market, for as bullish as everybody has been this last couple of weeks, which, oh, well, why am I bullish? Oh, because the price is going up. But for as like the great as the vibes have been the last couple of weeks, it's like, okay, now we have this pullback. And we said at the top of the show, I mean, neither one of us obviously are like, oh my God, what's happening now? What do I do or whatever? It feels like a good dip. But people do forget, though, or maybe it's their first rodeo, that these kind of dips are going to happen throughout the bull market. And Hex did more significant dips than this in its first cycle. So talk a little bit about that, if you would, and then we can kind of look at the Pulse chart and everything here too.
Yeah, maybe I should pull up this chart. And this isn't even all of it. This is only May of 2020. So this is missing. Let's see if they still have. Uniswap V1. Yeah. So this is the entire chart from Hex back in the day, and it made multiple dips like we're making right now. So, you know, if you're not used to big dips like this on the way up, get used to it.
Right.
I remember seeing how many times, you know, even just when you blow some of these up, you know, from the time of launch down to the bottom, it was 85%, right? On the first one. And,
wow,
you know, that one. And then you take a look at this one was another 75%. And then, you know, we got up here, pulled back a little bit. There's another 60%. I mean, these charts don't really show it and don't do much, you know, visual, but there were some healthy pullbacks. And then you had this one that came all the way down, another 70%. So, and then I think this one right in here was around Big Payday, which was also enormous. So, you know, you leading up to Big Payday, and that one pulled 86% down. So, you know, these things are healthy, and we still did a 10,000x. So, you know, just keep that in mind when you see a dip. It's a buying opportunity, a consolidation period. It's quite healthy. I hate the fact that, you know, we get green candles and then all of a sudden get a red candle and everybody's back at each other's throats. That's the one thing I don't like about it. You know, when the green candles are coming, everybody's in a good mood and, you know, celebrate. And, you know, we forget how many times that on the way up that this did this. So, and it made it healthier for that reason. You know, big whales taking profits, maybe too early. Maybe that's all they needed. Maybe that's all they wanted. And that's fine. But, you know, if you really want to get the gains, you've got to be there throughout the dips as well. So it's healthy. I you know, I don't mind it. And like I said, people need to use it as a opportunity to pick themselves up a little bit more if you don't have quite enough yet.
Yeah, I agree 100%. And I think Jenkins said it on Twitter today, Daddy Jenkins now. But he was talking about, like, you know, if you guys are still getting sucked into the drama and stuff like that on Twitter with the vibes of the market now and not paying attention to the market, then you are not going to do well. And I couldn't agree more. I mean, there's just no real room for any of that anymore. I mean, if that's what you want your life to be about, I guess so. But you know, there's just too much good stuff to focus on to really get into some of that right now. But yeah, really interesting to see that with Hex. I mean, like unbelievable pull. I mean, 80% is nothing to sneeze at. Like some tokens go down that far in the bear market, you know, and that's their low. So the fact that we're going to see that, go ahead. I was going to see if you wanted to pull up the pulse chart, but if you wanted to look at another part of the Hex chart here.
No. I'm just looking at it and reliving the memories, you know?
Yeah. Yeah. As you scroll through, it is funny how you can do that once you put in time with the chart. Like you remember seasons and what you were doing at the time and stuff. Yeah.
Remember certain times, even like that big payday and how it fell. And, you know, and then we got to, I think it was a New Year's Eve stream that Hexo and those guys were doing. It was a 24, maybe it was even a 48-hour stream. I think it was 24, whatever it was. But we made it all the way back up to 2 cents and hit an all-time high there. So,
yeah,
you know, just from November back up to December, like the you know, December 31st, you know, went all the way back up to 2 cents. I just remember lots of those fun times and all-time highs, and, you know, how people were. And then when it pulled back, it was like, oh crap, is this it?
Yeah.
And then we would go on to make, you know, Hex doubled. I think it was an average of like 40, 46 or 48 days. Every 48 days, it doubled in price on its run up. So it was just, there was so much emotion. And then, you know, the pullbacks as well on top of it. So yeah, it was just pretty crazy to look at it and kind of relive it. But